Hello everyone. So I'm going to use this video to explain the candlestick patterns and the market structures like supports and resistance, and also uh, we are going to talk about trend lines, and we are also going to talk about the different types of candlesticks pattern that we have treated, like the bullish engulfing, bearish engulfing, shooting stars, and all that. So first, let me start with the candlestick, how to read the candlestick pattern. So over here, that is this green one over here, this green one that are moving up and down. There are uh, two main components to a candlestick pattern. You have the body, which is the green part, and you have the wick, which is this long arrow over here. So the body tells you the place that the price opens and the area that it closes. So, and the wick shows you the swing low, swing high, and swing low. So let's treat, we have two candles here. We have the bullish candle, the green one, and the bearish candle, that's the red one. So for the bullish candle, price opens below and buyers pushed it up. Buyers push price up for the bullish candle, but for the bearish candle, price opens at the top, opens there over here, and sellers push it down. So the wick actually shows you price rejection. I'm going to explain more about that. The wick shows you how much price rejection. Okay, for example, let's use the bullish pattern. So the price opens here. You can see the pointer. You can see where the pointer is. The price opens here, just around the low of the green line. So when the price opened, sellers pushed the price to the swing low over here. So this is the swing low over here. You can see it. The price opened here, sellers pushed the price to the swing low over here, and then buyers now come in and push the price all the way up to this point. At this point, buyers started getting exhausted and sellers were able to push the price to this point. So at this point, that's when you have your closing price. So price opened here at this area that is showing 11,744. If you check the right corner of your screen, you will see it. Buyers, the price opened here, sellers pushed the price to the swing low here, and buyers rejected that swing low and pushed the price up over here. At this point, buyers got exhausted, like they were not able to push the price again, and sellers gained some control and pushed the price down to this point. So this is your bullish candle. This is your bullish candle. So the the larger the body of the candle, that's the green candle, the more significant and powerful the candle is. So if you see the wick is showing you price rejection. For example, buyers pushed the price all the way from here to here, and sellers pushed it down here to close the price. So the wick shows you price rejection. That's sellers did not allow the buyers to push the price beyond this point, and they pushed it back to this point. So that's how to read the bullish candle. For bullish candle, the price opens below and closes above, and you have your swing low and your swing high. So let me go over it again. The price opened here, sellers pushed it down to the swing low, which is the wick, and buyers push it all the way up to this point. At that point, buyers got exhausted and sellers were able to push it to this point. And this is where the price now closed. And after the price closed, that's when you have formation of another candle. Formation of another candle. If it is 1 hour time frame, this other candle is going to form every 1 hour. If it is 30 minutes time frame, it's going to form every 30 minutes. If it's 1 week time frame, it's going to form every one week. So when the price closed there, let's assume it's 1 hour time frame. So after 1 hour, the price now opened here. When the price opened here, buyers gain control and they push the price to this swing high. At this point, they got exhausted and sellers push the price all the way down to this swing low over here. But at this swing low, sellers also got exhausted and buyers pushed the price here, and the candle closed after another 1 hour. Then that's when you have this candle. This is a bullish candle. So sellers came in, pushed the price down here, and buyers came, pushed it all the way up, and sellers pushed it down and closed it over here. So you can see it for bullish candle, the price opens below and closes above. But for bearish candle, the price opens above and closes below. So you have your swing high and swing low, and the wick actually shows you a price rejection, the ratio at which buyers or sellers are rejecting higher or lower prices. So another thing to note is the ratio of the wick to the body. If the wick is longer than the body, it means that that is a very strong price rejection. But if the wick is far shorter than the body, like in this case over here, this candle over here, you can see the blue pointer. You can see that the wick is not that much. So this is telling you that this is telling you that buyers are very much uh, are very much in control, and the candle is bullish. So if the wick is longer than the body, it means that there is serious price rejection. So let's look into some candlesticks patterns. Okay, so let's look for bearish engulfing pattern. Over here, these two, we have the bearish engulfing pattern. Why we call it bearish engulfing pattern is because the bearish candle, that's the red candle, is engulfing the green candle. That is, it's covering the green candle. So that's it about bearish engulfing pattern. So let's look for bullish engulfing pattern. So let's look for bullish engulfing pattern. Yeah, we have bullish engulfing pattern over here. We have it over here. Sorry. Over here. Sorry. Yeah. Over here. These two candles. So these two candles over here, the small red one and the green one, that is bullish engulfing pattern. What is actually trying to tell you is that buyers are in control. It's bullish engulfing pattern. The bullish candle, that's the green candle, is engulfing, covering the bearish candle, which is the red candle. So let's move on. Let's look for that candle. Okay, let's look for the bearish Arami candle. You have it over here. This is the bearish Arami. You also call it inside bar. I'm talking about these two candles over here, the green larger one, and the is an inside bar. What it's actually trying to tell you is that volatility is going to expand towards the downside a little bit. So another candle we have is the bullish RMI. Oh, okay. Another candle we have is the doji over here. This red one that is like cross over here is the doji. This red one is a doji, and it's this one is actually a dragonfly doji. Is the bullish type of doji. This is the normal type of doji that just looks like cross. It's trying to tell you that both buyers and sellers are both in equilibrium. And also we have we have so we have which other one? We have the share armor, shooting star, and armor. So we have the shooting stars and armor and all that. I believe you all know about that. So I'm just going to jump into how to draw your supports and resistance in order not to make this video very too long. So how do you draw your support and resistance? First, you have to adjust your charts in order to see the bigger picture. Like if you just leave your chart like this, you won't be able to see anything. So you have to squeeze in, like adjust, zoom in, zoom out your chart like this. So that you can be able to see your key areas. So to draw your supports and resistance, you can use either of these two. You can use the horizontal line or horizontal ray. Sometimes you can just use trend line to draw it. So let's use the horizontal line, and you have to note your key areas. Okay, coming from the top now, where is your key area? This point over here is your key area. So you put it and tap on your screen. You put it over here and tap on your screen. You can see. So that's an area of resistance. You can indicate it with red color, or any color you want, just whatever color that you really like. So you can see over here we have another level over here too. You can see it. So that's another line. Over here you have another level. You have another level over here. Over here you have another level. Over here you have another level over here. So that's how you draw your supports and resistance. So how do you now identify? Supports and resistance is for range. The market is just ranging like this. You can see it coming here, going here. It's ranging between these bigger two major supports and resistance. So how do you now identify your trending market? If you check over here, you can see that this point to this point is going up. It's like a trend. So what you can do is that you can draw your trend line basically from the up to the down like this. This is a trend line. Though it's not that perfect, but I'm just trying to use it to give you an example. So this your trend lines. You see, that's your trend line. That's guiding you, that you can see that the price is moving within this channel. So that's this an uptrend. This is an uptrend. So let's look for downtrend. Let's look for downtrend. Let's look for downtrend. Okay. Okay, you can see over here too. This is an uptrend. So you can just use your trend line to this your trend line to over here. You can just use it and draw your trend line. You can just use it and draw your trend line and draw the upper one too. So I'm just trying to use it to give you example. So this is it. You can see this an uptrend. You can call this one over here. You can call them ascending channel, and if you look at this properly, it looks like a bear flag. It looks like a bear flag. Bear flag. Can you see it? So potentially price is going to break down from this. Okay, so let's identify downtrend. Okay, looking at this, you can see that you are having lower highs. This is a downtrend. This is a downtrend. This is a downtrending channel. This is a downtrending channel. You see it. So price was moving through the downtrending channel like this, till it finally breaks out. So that's it. That's all about this video. I just want to use it to make short explanation about candlesticks pattern and how to spot your supports and resistance on your chart.